Hello, my YouTube friends. My name is Adam Kahn, and this is Dividend Retirement. Thank you for joining me in my rotation from growth stocks into dividends on this journey while I move in my set it and forget it account towards these things. So, hello, everyone. I hope everybody's having a good Friday. Today is Friday, February 13th. Oh, is that Friday the 13th? Uh-oh. Be careful out there. It's Friday the 13th. Tomorrow is Valentine's Day. Anyway, before I get into the video, just to get out that disclaimer out there, as always, nothing in these videos is financial advice. Please don't listen to me when making your financial decisions. You really need to do your own research when making any investment decisions and maybe reach out to a professional financial advisor. I am not a professional advisor. I am just a guy on YouTube sharing what I've done over the years and my experiences. Whew, got that all done. So what am I looking at? Guys, understand this is going to be a long process. I am in no hurry to get out of some of the things that I have. What I've started doing is selling some out of the money calls on the stocks that I have so that as it gets taken, I will buy dividend stocks. I like the companies I have already. The largest majority of what I have in my set it and forget it account is Meta, Google, Chevron, and then Amazon. And I don't mind owning those companies, whether they go up or down. In the meantime, I will pick prices where I'm happy to sell. I will sell a call here and there. And as that gets exercised on those stocks, I'll use those funds to put it in dividends. And what stocks have I been looking at? Well, there's a whole bunch of them. I've been looking at, I think I talked about MLPA I mentioned the other day, which looks very attractive to me, pays about a 7% dividend. I don't think it has a whole lot of upside potential, although energy is getting in the news, so maybe it drifts higher as well. I also look at a stock PFFA, which is a Virtus fund that invests in preferred stocks. Sorry, I had a brain fart yesterday with it. But it pays monthly, which I really enjoy. But the only thing is, I don't want to put too much into a fund like that. So it probably would be a small percentage, but I like it. Pays a 9% yield annually. And I also do like the monthly. If I thought I could guarantee that return, I really would put all of my money in something that paid 9.5% return and paid monthly, because that would just be awesome. And then I wouldn't think about anything. I do not advise that. Don't hear it the wrong way, because I don't trust putting all of my money in anything like that. But I think that's a really good return that I would be happy to get no matter what happens in the world. Excuse me, my eye itches. So I'm looking at PFFA, but then I'm looking at all sorts of things. I actually bought a little bit of MTN, which is Vail Resorts, in my trading account, primarily because my thought was it's paying a nice dividend. I'm just worried about the risk with it. When I look at it, I don't love some of the things I see with how much debt they take on, and I worry that that dividend is at jeopardy. Now, when I bought it, it was paying a 6% yield. Even though it's in my trading account, I'm not trading it. I don't really pay too close attention to it. What I'm hoping is once I'm more comfortable that the dividend feels more secure to me, like if they get more snow and ticket sales go up and everything else, that I would then buy it in the set it and forget it account, get out of the trading account, whether it made money or lost money. Because companies like that, I really do just plan to own. And what I hope is that the dividend's able to continue to get paid. But again, it made me a little bit nervous, and the stock will fall in price if they're not able to pay that dividend. The other things that I'm looking at are Ares Capital, Vici Properties, and Realty Income, which is ticker symbol O. The three have different things that they invest in, all primarily, like some are REITs, as well as Ares Capital invests in like senior secured loans. My concern with Ares Capital, similar to PFFA, I just don't trust putting a whole lot of money in something that's paying that high a dividend, because I don't know what types of risks they're taking on to be able to pay that. Typically, the higher the dividend, the more risk they're taking, despite the fact that you and I may feel warm and fuzzy that, oh, they're paying this money out. They have to actually make enough in order to be able to pay it. And I don't know what could go on in the world and if they get more defaults and what could change. Like, I'm not aware of their book well enough to really sock away a good amount. But Ares pays just like PFFA. I think over a 9% yield, which is super attractive, to put a little bit of the account into that, because if they're able to continue and succeed, it really could boost things, even adding a small percentage of the portfolio in some of those higher yielding things. Now, VG and O, or Realty Income, are both REITs. The only reason I hesitate on VG is they are Las Vegas based. I think it's a great company, and I think it's a good opportunity. Similar to SL Green for different reasons, but similar. The news has been so negative on Vegas, like it's dying, nobody's going. And as somebody who lives here, that isn't really true. Things are just fine. It might be a little bit slower, but the numbers are not nearly as bad as the news makes it out to be. It's created the share price to be able to drop a bit, giving a better yield, and it doesn't really impact VICI's ability to make those dividend payments, because their rents are based on contracts that they have with automatic increases every year, a couple years, or whatever agreements they have with the casinos. The only way they really lose is if things get so bad that either the casinos go out of business or they have to renegotiate their contracts with the landlord, which I don't really think is what's going to happen. So as far as I'm concerned, they're going to continue to make the money that they projected. They're going to be able to put those rate increases in, and they'll be able to continue to pay their dividend payments. Now, of course, don't take my advice. Do your own research. Just my thought on Vici. The reason I like O is because they are the biggest and the baddest out there. I think it really creates a more stable business because they're so big, and their clients are the biggest in the world. And similarly, unless we have a big collapse, I really don't see them running into a position where they just can't rent out space. So I think what I like about Realty Income is just the stability. The negative is I don't really see the stock doing much, or the dividends going up all that much. It's probably a small increase, but it has a nice dividend, so it's kind of like giving up the growth for a little bit of the payment and the security of having the biggest and baddest. Now, just since I mentioned it real quick, I'll talk about SL Green. Similar to Vegas, that's the New York one, and I think Mamdani has everybody so panicked that everybody's going to flee New York that it's just going to become worthless. But New York is still a great city. It is the hub of the U.S. I don't know that one person is going to impact something that much. I don't think all the businesses are just going to run from New York. I think they could have problems because of whatever's going on, but I don't know how much that affects SL Green and their ability. Even if the billionaires all flee New York and you lose that, it's probably a relatively small amount of, like, it could affect the taxes and some other things, but I don't think it's really going to affect the stores and them wanting to rent and sell whatever products they're selling. My guess is most of the people walking in and out of, I don't know, whatever pharmacy it is, aren't the billionaires. So it might hurt different levels, but I think most day-to-day transactions and the rents and things that SL Green are going to be dealing with isn't something that really is going to be impacted by what happens with Mamdani. I don't think you're going to see a mass exodus of everybody in the city, even if the rich leave. So those are my thoughts on those three. These are the ones that I've been looking at. In some ways, it's a little bit premature because most of the options I've sold are for like June and even for December. I have a few expiring in March, but I don't think those are going to get exercised. So as much as I'm doing the research just because it is who I am and it's what I want to do and what I like to do, I think it's a little bit premature. And if the stock market continues to flounder along, this could be a 3-year process while I rotate in it. Now, at some point, I will do a reveal of the portfolio and show how many shares of what I have and where the options are and everything else. I'm a private person, and I don't really want to show the value of the account and other things, but at some point it's appropriate because I'm sure some of you are in the same position, and those of you who strive to get to retirement and want to live off dividends, as much as it's uncomfortable for me, I think it might help people to get to the point that they want to get and be able to do the math analysis of work things backwards. Like, what you need to do is figure out what your monthly spending is, how much you need coming in, and then you should be able to figure out approximately how much money you need in the account to get to retirement. Now, once you get there, you have to factor for inflation as well. And depending on your goals, like my goal is not for this money to be at zero by the time I die. My underlying motivation is I'm hoping to pass it down to my kid so that whatever he wants to do for his life, and my wife, because I expect her to outlive me and don't mean to forget that, but whatever his goal in life is, that he gets to be able to do that without the stress of it needing to be the end all be all to cover his bills, because hopefully he has enough that this can cover the bills and he can focus on whatever his passion is. Now, maybe that's just a fantasy, but I'm hoping this outlives me. And I don't know, that gives me some satisfaction. I love my wife, I love my kid, and we donate too. I really enjoy giving money to, like, it gets so appreciated. I don't like that you get hit up again and again and again once you start giving, but it makes me feel good to be able to give, and I hope to be able to do that for the next 30 years. Anyway, Tuesday, 11 o'clock on my other channel, Investing with Adam K. Do me a favor if you can make it at least this week, maybe next week if I can. Maybe I start trying to do it on this channel, but it's so new, I worry that nobody really shows up. But Tuesday, 11 a.m., Investing with Adam K. I love the live platform. I will do a live. If you could do me a favor, I hate to ask it because really I hope you just sit here because you find it enjoying, and I don't really care if you hit the like and subscribe. I ask you to while I'm getting the channel set up and built and growing, because if you subscribe and I get more subscribers and start to build the channel, I can just do this one and hopefully, do a, maybe start working on the technicals where I can point to something and put it there and whatever else. Anyway, have a great weekend. I don't know that I'll have time to do a video this weekend. We got snowboarding tomorrow. We got family stuff Sunday. And then Monday is Chinese New Year. Going over to a friend. Super excited to give out some red envelopes to the kids and all of that good stuff. Have a great Friday. Talk to you guys soon. Bye-bye now.